What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at the ever so popular S&P 500 ETF SPY, ticker symbol SPY, on a variety of time frames in anticipation of the next trading day, Monday, May 6th. All right, guys, SPY here on Friday finished the day up $6.26 a share. That's plus 1.24% in regular trading hours. It is up a little over an extra point in after hours. Listen, as always, take after hours with a bit of a grain of salt because you can see that volume, especially as we get past the first 15 minutes of after hours, it really starts to die down. So just take that movement with a grain of salt, whether it's in your favor or going against you. Now, of course, this pop that we had Friday morning, it's about 1 hour before the market, well, exactly, I suppose, 1 hour before the market opened on Friday. That was, of course, the favorable jobs data that we got. That's giving the market a little bit more confidence here of rate cuts coming from the Fed. Now, this is a SPY video, right? So a little bit of insight into what's happening tomorrow. Really not a whole heck of a lot. We do have at 12:50 p.m. Eastern time, Fed's Barkin is speaking. And then at 1 p.m. Eastern time, we have the Fed's Williams is speaking. But that's really about it as far as, bigger macro events here on Monday. So let's take a look. We're going to take a look at the volume profile, do a quick analysis on that, pull out any bias that we can possibly get. We're going to take a look at the psychological levels, and then we will finish out with the expected move, which on SPY we have the luxury of daily expiration. So we'll take a look at that, and we'll finish out as well with the directional bias coming out of the chain. So let's start here with just a quick little analysis of that volume profile here on the 5-minute chart. Again, we're looking at the price action in relation to the volume profile and pulling out, okay, did we see on the more dramatic moves, did we see the volume supporting that or actually not doing so? Listen, by the way, guys, if you are new here, SPY is a daily upload here on the channel. My goal here is 10,000 subscribers. I think we can hit that with your help, of course. So I appreciate you doing so, and I'll keep the SPY videos coming. So looking at the volume profile here, guys, I want to take a look, first on this bigger green candle off the news. With news, we have to be careful because we expect to see an out-of-context volume pop. And when you have news in the mix, what would be out-of-context volume at that particular time of day all of a sudden becomes contextual. Okay, but on that move, we did, of course, see a little bit of bullish bias as the volume faded when the ETF stock, right, ETF really, began to level out. We saw that volume fade. Now, looking here off the open, a very normal amount of volume off the open. We then see it fade, and on that little pop, we get a pretty contextual fade of volume. Then we see this big red pop, okay, on that bigger red bar that we saw with a big upside wick. A couple of things to be considering here. The presence of that big upside wick tells me that this was a battle bar, meaning a lot of buying and selling happening on the same bar. Of course, it was a bigger downside red move, right? But we have to be aware that there was quite a bit of buying action also going on in that candle, which we can tell by that wick. Okay, that's going to help pump that volume up. Now, the fact that this volume is so high, if we were seeing 3-4 red candles in a row at that volume, even at 1.5 million, right, that would be very clear bearish bias. But here, when you just have the one bar, okay, followed by a smaller move bar, right, with a little bit smaller volume, but still out of context green volume, to me, I'm always uncomfortable assigning any bias at all to single outlier or conflicting, like we have here, candles. There's not enough. It's not, there's too much of a risk of fooled by randomness on one bar that can oftentimes be driven by some kind of data release or statement. So I think we need to move on from there. As we move in, we have a very normal volume profile for the remainder of the day. And then we see this into the close. We compare that to, here, if we just peek at the 30-minute here, we can actually see the volume. You can see it's very normal, okay? That last volume bar. When we look back here, what happens there, guys, is on SPY. On blue chips, we typically see that big volume bar on the first candle after the bell, this one, right? But on SPY in particular, the rebalancing, which is what this is, coming from funds and institutions, tends to take place. This is very important to understand so that you're not caught off guard when you see that most days. Just before the market closes when that takes place on something like SPY. Whereas on the individual stocks, it tends to be immediately after the bell. So this is algorithmic movement, but you'll notice that the movement in the actual candle is oftentimes very, very minimal. That's because we're seeing a lot of buying and selling happening on the same bar. And that's honestly, guys, that's really all we can pull out of the 5-minute here on from Friday. So let's move on. Let's take a look at the psychological levels, starting with the 30-minute chart, a very heavily watched time frame, heading into tomorrow, Monday. And you can see that my chart's very, very basic. I have the 50-period moving average and the 200-period moving average. And you can see that back on Friday, we kind of went ahead and made a more definitive, decisive move above that 200 period. We reclaimed it in the after hours. Listen, guys, after hours and pre-market reclaims and breaks of psychological levels like the 200 period. I prefer to see that with some clarification once the market is actually open and the volume is allowed to actually pour in. We did see that on Friday. We never, of course, got a retest. It's okay to have these pull away days, especially, a 1.25% move on SPY is not a small day by any means. But what that allowed us to do here on the 30-minute is we yanked that 50 period, that white line up along with the ETF. That's a good thing because for me, I'm always looking for as many psychological barriers in the opposite direction of how I'm positioned as possible across as many time frames as possible. The 50 period on the 30-minute is a quick moving average. One of the quickest that we're going to see, or the quickest on the 3 charts that we're going to look at here. That's heavily watched, that carries a lot of psychological weight across all most market participants. Like, for example, you probably wouldn't look at like the 17-day or 17-period moving average on like the 15-minute chart simply because it's too niche, right? There's not enough eyeballs watching it, and all I'm interested is that psychological impact from these levels. That's why I keep it so simple. So it's good to have this getting yanked up because that puts in the bears' minds a little bit of another, just one more tick, right? Another hang up, another box checked with, hey, we got to watch out for that 50 period on the 30-minute. We might see a hang up there since it tends to, see respect, at least oftentimes. So listen, bulls, what I'm looking for on this chart in particular come Monday here, if we see a retest of that 50 period, I don't care what volume we test on as long as we bounce away on elevated volume. Okay, but ideally we just yank this 50 period up higher, reclaim 510, get as high as we can and as close to the stock price as possible while it maintains that level or of course moves higher. If you're a bear, number one priority here tomorrow is to break downside back through the 50 period on high volume, low volume retest for that confirmation, right? And then boom, high volume rejection, confirming that 50 period as a short-term area of resistance yet again. Now, the 4-hour time frame, let's take a look. You guys can see this is a really important, I think, day on the 4-hour chart heading into tomorrow, Monday. We're testing the 200 period. Okay, bears, let's start with you guys here. This is really simple. Bears, all I'm worried about here is rejecting hard off the 200 period on the 4-hour chart. Make that hang up prove itself. Okay, bulls, break upside through and then retest and bounce. Now, getting a retest and a bounce in one day on the 4 hours is a little difficult because you're only working with 2 intraday candles, but you can watch the 200 period on the 4 hour on a shorter time frame where it gives you more candles to actually visualize that retest and bounce playing out. That's your ideal scenario if you are a bull. Now, let's take a look at the most important chart of all. That's going to be the daily. Listen, first of all, guys, I opened up a couple more platinum spots. You can take a look at that link in the pinned comment. If you've been waiting for a platinum spot to open up, I think now's the time before they sell out, and I'll be closing them up again once we fill those couple of spots. So let's take a look at that daily chart. Okay, you guys can see here that this is probably the biggest day that we've had on the daily. In the last few weeks, I guess even more so than the 29th of April that we saw. We are right up against the 50-day moving average here on SPY. Okay, bears. Priority number 1, reject the 50 and get back below that psychological 510. Try to set yourselves up for a back test of $500 a share, which is really the level that if you're a bear, you want to get back below. Okay, that starts with a rejection off the 50-day, which, by the way, everyone's watching on SPY. It's such an obvious level. All right, bulls, rip up through the 50-day. Sometimes if you see a strong rip, that'll lead to even more FOMO volume pouring in. But I like to see a retest and a bounce on these big breaks. Intraday, ideally, not really pre-market. If it breaks above in pre-market, that's fine as long as we see an intraday test and bounce. Sometimes you end up seeing just a rip up through and it continues throughout the day. Okay, that's fine as long as in the following days we end up seeing that retest. I really am a fan of confirmation. I don't like leaving on anything unseen or unsaid, right? And bears, just a high volume rejection off the 50-day. Ideally back down through 510 is what you guys want to see. All right. Now, implied volatility. It's falling. Okay, it's falling rather aggressively. If you've been seeing some IV crush lately in your contracts, that would be the culprit right there. But understand also the lower that goes, the more favorable conditions become to purchase new contracts. Okay, now, expected move for Monday. Monday is, of course, going to be May 6th, okay, and the expected move by tomorrow's close being priced in by the options traders compared to Friday's close is plus or minus $2.73 per share. Okay, understand now, by design, that does not include directional bias. This is a different part of the picture, right? That is volatility bias. That's what the market's volatility bias is, which is a really good thing to understand, especially if you're trading options, because it's another thing. You know, with shares, it's like a directional bias thing. Like, that's kind of all you have, right? But with options, there's this whole other world that you can play and utilize to your advantage, which is, first of all, having a directional bias. But if you're playing options with only a directional bias, it's not enough, okay? You also have to have an opinion on the volatility compared to what the market's volatility expectation is, and then you can position yourself that much more effectively. But we can pull out directional bias by looking at the actual volume. This is all just from Friday. We had 8.8 million total contracts traded on Friday, 3.79 million calls, 5.06 million puts. So a bearish bias out of the overall call-put ratio. But if we break it down by time frame, right, those short-term speculators in the 0 to 20 delta range, right, we had about 1.28 million calls and about 2.46 million puts. So the short-term speculators also leaning with a bearish bias as well. Listen, guys, hey, if you're getting value out of these daily SPY videos, I ask you to do one thing. Takes half a second. It's 100% free. Leave a like on the video and then get out of here and enjoy your day. I greatly appreciate it, and I'll see you in the next one.